Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. And keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy.
All right, folks, here we are on Sunday, December 29th. We're going to take a look at Affirm today. So my voice is a little rough these days. I blew it out earlier this week, so bear with me while I do my best vocally with the video. Now, Affirm's been on this crazy run since back here in August when it was down in the 13s and had some sort of jumpy periods up here into, that was August of 2023, FYI. Jumpy periods up here into December of last year, and then sort of a pretty successive, not successful, but successive downturn from that December run to August of 2024. So you see sort of an interesting annual cycle here, August to December 2023, and then August to December 2024. Will history repeat itself? We'll see. But it is struggling to hold those gains at the moment. But even with this recent run, it has been a really impressive Q4, coming from like the 20s all the way up into the 70s. That's a pretty successful run. We can give that one the successful moniker. But nearest end resistance level that I see at the moment, not 64.64, those were closed on Friday, 67.87. So pinned just under that at the moment. The nearest strong support that I see is 56.64. Now, there's a huge percentage gap there, right? Like if it fell from 67 to 56, there'd be a big chunk of percentage loss. So I don't doubt that there is some price action to develop in there, but I tried to just keep what I felt were the strongest potential levels. Again, because if we do see some sort of cyclical happening here, where we got 2023 August to December, and then 2024 August to December. So if we do get a repeat, I wanted to fill in some decent support levels and without cluttering the chart too much, and so that's why there's so many price gaps in between these levels. But I do think that those levels that are here are very strong. So again, 56.64, 48.85, 41.66, and then 31.08 would get pretty close to the low 22s where this run in August kicked off this time around. Now, if it does decide that it's some catalysts come in, whatever, but it can get some support back over 67.87 and make another attempt at that 74.86. Obviously, it fell well short here, but this time around, if it can get through these highs, 74.86 is what I see, and then 83.39. I don't know if I put anything above that. Nope, 83.39, and we have fairly thin price action once we get up into those ranges, but we have some price action to go off of, so that it's not nothing, but it's a little bit thin. So those are the levels that I would look at if it does continue to push or get sort of like another leg of this run that we currently find it in. Now, EMAs wise, this look and the look that we're going to see here in the Thinkorswim side of things looks a little precarious to me. Precarious for Affirm bulls anyway. So things are getting pretty tight in here. It's starting to slip. That 8, you see the white EMA here, it's looking like it's sort of putting in a few candles where it's confirming that and the 21 as resistance, while it's getting pinned between support on the red 34 and resistance against the 21 EMA, and now also the 8 EMA, because the 8 EMA is being drawn down into contact with the 21, sort of maybe foreshadowing a bearish crossover there. We'll see. If we do get the bearish crossover, then things might get pretty tricky pretty quickly for Affirm. And we might see some action coming down. Now, the one that I would really get concerned about would be if we see that 8 cross through the 34 especially if it's not a sort of lackadaisical cross, but if it's a pretty strong crossover, and starts to throw bearish crossovers with the short-term EMAs, yeah, that might get pretty rough. Because even through this whole run, even here, right, you see it did briefly cross below the 21, the 8 below the 21, but it didn't really come anywhere near the 34. And then things got a little bit touch and go here as well, but it was able to shrug that off. So will it look like that, or will we see that white 8 EMA get drawn below the red 34? Yeah, to me that could spell a tough go for the bulls, at least for the near term. Now 4506 is where the 183 EMA is currently situated. So if things got really hairy for Affirm, what I would look for is at least some, putting up some sort of a fight, if not just getting a bit of a bounce, or even just some consolidation around the 183. But it's unlikely it's going to drop $20 on Monday and just immediately be there. So these EMAs are obviously dynamic, so they shift as candles get put in and as price action accumulates, and so those will change. So wherever that 183 EMA is, I would look for it to come in with some strong opportunity for support if a firm gets there. So that's my look. I actually think those EMAs are probably the most interesting thing, especially since I did spread these levels out kind of far. The EMAs are going to tell the story faster, I think, than these levels, and then maybe sort of seeing where the EMAs, this is actually clean enough that it doesn't look like a terror if we look at these together. But yeah, if things get kind of thorny, looking where this 56 is situated, by that point, maybe that 183 EMA is up here toward the 48, or who knows, if it takes a long time to get dippy, maybe it comes up here toward the 56. But in any case, that's to my mind, the EMAs are going to tell the tale here. Is it going to be able to shrug it off like it did back here, or is it going to turn, which is what it's looking at the moment, like it's sort of leaning in that direction, but you never know, right? Something could come in, it could get a good catalyst rating, it could have some good news on sales or whatever, product offering, and that could drive it up. So over here on the think or swim side of things, we do have a pretty lengthy trigger happening on the TTM squeeze indicator. So that, to me, again, giving a potential warning or forecast for an outsized move coming up. Now, an outsized move doesn't mean that it has to, become a rocket ship and fly to the moon. Outsized move can be in either direction. So just say that to caution people. If the TTM squeeze indicator triggers and fires, and then we get a big move, it could be in either direction. Also, sometimes the TTM squeeze indicator triggers and fires and nothing happens. So that could also be the case. It's just one data point, right, in a whole slew of things that are happening. Now, we do see at the moment that it put in several rejections near or at the call trigger for the month of December, and now has found itself putting in a series of at least struggles, if not also pending rejections at the put trigger. So if it does get dippy, I know we're almost out of December, but if it does get dippy for the rest of December, we have a -1 ATR at 55.12. We have a sort of a stop in the mid-range around 60, and then getting into January, that put trigger for the time being is situated around 61 or so, it looks like, with a -1 ATR all the way down to 50. So, if things do sort of get drippy, leaky for Affirm, because it is underneath the put trigger, and if that sort of continues in through January, and the CTM squeeze indicator is giving us a positive trigger and fire, maybe that puts that -1 into play. The other side of the coin is it's not that far away from the call trigger, or even just from spending January consolidating. So if it comes in sort of relatively close to where it is, where the price action is now, it comes in just at the base ATR, and it's sort of, free game. Again, like I said, at this range, it might need another catalyst or news item or something positive, right? It might just not run off of charts or vibes or whatever. So that's why I keep kind of mentioning that if it is going to continue to the upside, that sort of feels to me like that's what it would need, but who knows? Could be wrong. But if it does get legs again, looks like that call trigger is situated around 68 or so. At the moment, this is for January I'm talking about, with a +1 ATR all the way up to 79.28. So we'll see if any of that comes into play or what that looks like. But these are the levels that I have. Yeah, you can barely see that 83.39, but you can see it. All right, folks, so I hope that you've had a nice weekend and that you have a great trading week ahead. And as always, I appreciate you watching, and I will see you in the next video.